Good morning, everyone, and welcome to the Trade Talk podcast. Today, we will start with India specific headlines. India's CPI inflation in November slowed to 5.5%, supported by a sequential fall in food prices. Even as core inflation remained stable, we maintain our FY25 average headline CPI estimates at 4.8%. We expect the CPI inflation to glide towards the RBI's 4% target in Q2 FY26 and stick to our February rate cut call with a shallow 75 basis cut cycle for the calendar year 2025. Even if we consider IIP growth in October, then it improved marginally to 3.5%. In the month of September, it was around 3.1%, despite an adverse base effect. According to sectoral classification, the manufacturing sector led growth at 4.1%, followed by electricity, while mining growth remained muted. In terms of use-based classification, all categories registered positive growth, led by consumer durables and construction goods. Broadly, we are of the view that the rate cut cycle is going to start, and then with the help of that, we can see some support for rate sensitive sectors. But if we go through with US specific news flow, then there we saw some weakness for equities, and 10-year bond yield is now at 4.31%. It was around 4.15 levels some few days back, and dollar index is again back to the levels of 107. So global factors are not in our favor. In fact, they are negative for emerging markets. And if we consider FI's activity, then there also they sold nearly 3,500 crores in the cash segment on Thursday. Also, if we consider FI's activity in the FNO segment, then there also they have increased their short positions on the futures, and it is something going to minimize upside for the market or going to increase downward pressure. On Thursday, on the day of weekly expiry, we saw gradual decline in the market, and it closed around 24,500 levels. Furthermore, weakness may lead to furthermore correction towards 24,400 or maybe 350, where the market is having next leg of support. In case if we see the market is sustaining below the levels of 24,500, then the chances of hitting 24,300, 350 would turn bright. But after this specific news flow on the inflation front, if we see any reversal from lower levels, then again the market will form higher bottom sort of formation. So we need market to sustain or trade above the levels of 24,500 for furthermore upward activity. Otherwise, the market will remain under pressure. Close to 24,300, 350, we should look for taking some contra bets. But at the opening levels, it is better to avoid taking any contra bets. And for the Bank Nifty, there also we saw a gradual decline, but around the levels of 53,000 and 53,200, the Bank Nifty is having excellent support. So we need to see that whether the Bank Nifty can manage to sustain above the levels of 53,000 or not. On a closing basis, it should not close below the levels of 52,900. Otherwise, we can see further more weakness for the Bank Nifty. Bank stocks, IT stocks should be on the watch list, and accordingly like we have to design our trade. But for the day it is like quite tricky. We need to see that whether the market sustains above the levels of 24,500 or not, and based on that only we can look for creating any specific position in the market. That's all from my side. With this, I'm ending today's call. Thank you very much for listening to me and have a great day to all of you.